Good day. Hi, I'm Steve, and welcome to another edition of the World of Global Equity Timing. Today, we're going to show you how the technologies of global equity timing, specifically ATOM and ADA, would have saved a hedge fund manager from disaster, a $4 billion disaster, and a fund, because of that disaster, went from $20 billion in assets under management to $8 billion under management. This is the first of three parts of this series discussing how global equity timing could have helped this manager avoid disaster, and we're going to show you right now how that happened. Let's get to the chart. Okay, so what we have here is a stock called Valeant, which was a pharmaceutical stock. It's now no longer listed, but it was a huge winner, and it turned out to be a huge loser as well. Let's set the stage here besides what the stock is. We're looking at weekly bars. We have a filter composite filter shown in the upper portion of the screen, and below we have our trusty ADA accumulation distribution alert system. We're going to show you how ADA would have saved this manager from disaster, and we're going to show you how the entire global equity timing set of tools would have allowed you to exit this with a couple of big profits before disaster hit this stock. Well, let me talk about when this investment manager actually bought this stock. This manager spent a number of billions of dollars buying this stock in this zone right here. And for a while, he was correct in that the stock went up to this level in here. However, he held on and held on and held on, and finally sold well below $30 a share, and that resulted in, well, as you can see very clearly, a $4 billion loss. Okay, how would global equity timing have handled this entire chart? Let's start over here on the left-hand side. And what we're showing is the accumulation distribution alert oscillator. And you can see that in this zone right here, we had buy signals. But what was important about these buy signals was the context in which those buy signals were occurring. ADA had been bullish for 52 weeks until those buy signals occurred. If ADA is bullish beyond 35 weeks at one time without dipping into the red zone, that is extremely positive, and you always want to pay attention to those situations and wait for an ATOM buy signal to get generated. Well, not only did we have an ATOM buy signal there, but if we go to the top of the chart, we also see that the filter composite was in the bullish zone, and that's the green zone above. So we had a couple of really strong things going for this trade, and as you can see, it did extremely well. Well, this particular market went through the stock went through a period of consolidation, and another ADA type signal called WHAM appeared here, in which the stock got extremely oversold in terms of ADA, and after that happened, we immediately got a buy signal. In addition to that ADA pattern, look at the filter composite. The filter composite was between +5 and +10 in a very bullish zone, saying this stock had everything going for it, and it did. It zoomed clear on up to 255 from our initial buy signal at 120, more than doubling in value. Now, global equity timing, I haven't shown you the trailing stop on this. It was not pretty, but global equity timing exited right in this area here. It gave back a lot of the profit. The stock just basically collapsed. Was there any additional warning you might have seen on this stock? Well, the note here is momentum starts to fade as bars go from green to yellow. In other words, we had this strong run. Don't be concerned, but we got into the yellow zone, and things got a little squirrely here, because what the yellow bars are telling us is that momentum is starting to fade out, and it did it in a huge way. we wouldn't have actually gotten out here. We might have lightened up at this point, but really the sell signal came down in this zone here, which we haven't shown the trailing stop just to not to make the chart too messy. But indeed, there was a trailing stop there. We would have exited out, given back a lot of the profit, but still had a profit. Well, if our hedge fund manager had been so lucky as to have had global equity timing helping him, he would have ended up staving off disaster, at least exiting in here, getting long in here, out there, and going clear back to 2012. In this first example, this hedge fund manager could have taken advantage of a move from 45 clear on up to 135. Well, I hope you've enjoyed this edition of the World of Global Equity Timing. We'll have 2 more in this series about how to avoid disaster, or at least how this hedge fund manager could have avoided disaster with global equity timing. So until next time, good timing, good trading, and good day.